Welcome back, my awesome people. Today on this channel, on this episode, I have Will Rhind, the CEO of Granite Shares, back again for his second appearance on the Another Jacob Rant Channel. So, Will, how are you doing today? And I hope everything's going well since the last interview.
Doing great, thank you. Thank you so much for having me back. Good to be back. So everything is good here, and yeah, business is good ever since the election announcement, basically. So markets seem to be going up and volume increasing.
I mean, we kind of mentioned it already in our last interview that the election was going to be a pivotal moment for stocks, ETFs, bonds, alternative investments, and here we are now. We have a Republican leader, and the stock market has not stopped since the election, and so I'm glad that Granite Shares is doing amazing as well. Since our last interview, I did buy a few Granite Shares ETFs. I did buy the Nvidia one, the I believe the NVDL. That's
Yes.
been doing amazing so far. But before we get into the deeper questions, can you just give us a little rundown of who you are, Granite Shares, just a little synopsis on those that have not watched the interview, the first one?
Yeah, sure. No, for those that don't know me, I'm Will Rhind, founder and CEO of Granite Shares. We're an ETF issuer, which means that we're an asset manager that issues a specific type of fund called an exchange traded fund or an ETF. Business is headquartered in New York City, and the majority of what we do is here in the US, albeit we do have a business in Europe as well. We're active on major European exchanges. We offer different types of ETFs, but what most people probably know us for is a new type of ETF, which is leveraged ETFs on single companies or single stocks like Tesla, Nvidia, Palantir, etc. We are the market leader in that space. We built that business now to just over $10 billion in assets under management. And on a day like today, as crazy as it's going to sound, we traded $4 billion today across our product range. So incredible amounts of demand that we're seeing for these ETFs from here in the US and across the world.
There definitely is a demand. My viewers, as I said, since our last interview, I did jump into the Granite Shares NVDL. And as you know, NVIDIA is still rising, especially their previous earnings that they just had. So, Will, let's get right into it. So, short and leverage ETFs is what Granite Shares is specialized in, and they are gaining popularity, especially with the 2X. Can you just tell us what short and leverage ETFs are, and what do you think is driving this growth? I know with the election, everything is going up pretty much, but what makes leverage ETFs a little bit more special?
Yeah, so short and leveraged ETFs refer to this new type of category of ETF, which uses either leverage in the case of providing exposure to both long or short exposures, or not leverage if it's just an inverse exposure. And it's designed to provide or to give investors the ability to the potential to profit from stock prices moving either up or down. So if stock prices move up and you're in, say, a 2x long ETF, the idea is that the ETF delivers two times the return of that stock over a given day. So if it's NVIDIA, for example, and on a day like today, NVIDIA is up roughly 1% today. So NVDL or a 2x levered long NVIDIA ETF would be up about 2% for the day. And then conversely, if you're in a short ETF, and let's say the opposite had happened and NVIDIA was down 1% for today, if you were in an unleveraged ETF, you'd be up 1%. And if you were in a 2x short NVIDIA, you would be up 2%. So these are specific trading tools designed to take advantage of stock price movements, either positive or negative.
So pretty much just to summarize, leverage means if it's a 2x, you're doubling your percentage return. If it's a short and it's a 2x short, you're pretty much losing double on your asset class. But my viewers, are things going down now? Maybe some classes are, but not all of them. And on that note, Will, what asset class or sorry, sectors do you think is very effective for leverage and short ETFs? What sectors currently would you recommend?
I think this year, obviously, the two standout ones have been crypto and AI. So on the AI side, you've got NVIDIA, which has been by far and away the poster child for the AI revolution. But clearly, there are many, many stocks on the AI side that are benefiting from this, not just NVIDIA. And then on the crypto side, you've had everything from cryptocurrencies themselves, with Bitcoin, here hitting new highs, to the crypto stocks such as Coinbase, MicroStrategy, etc., all being sort of big hits this year. So I think those are the two sectors which have been really, really popular since the beginning of the year, Jacob. And it doesn't seem like, I know now we're closing in on the end of November almost, but it doesn't seem like any sign of slowing down at the moment.
I definitely agree. As you know, crypto, I think just an hour ago almost hit 99,000 per coin. And on that note, I know on our last interview, I did ask if Granite Shares was maybe thinking of maybe creating a crypto ETF or maybe a leveraged version. What are your thoughts now that, as you said, there's nowhere to go but up? It's still going up for at least a few years, I would say. What are your thoughts on that?
So I think that my response is probably the same as last time, which is that the crypto ETF market is quite well covered now in terms of Bitcoin ETFs and Ethereum ETFs. I think our approach remains that we were trying to give people leverage to the crypto companies. So 2x Coinbase, or CONL,
Oh,
CONL
nice.
is our second biggest ETF actually now after NVIDIA. So that's been a huge one for us. Trades like crazy, very, very popular. In Europe, we have MicroStrategy, we have Block, we have some of the other crypto ones. So I think it's a case of, that's been our approach, is providing exposure to the crypto companies as opposed to crypto itself. But that's to say that if we found a way to differentiate and be able to offer something different, we'd certainly do it, but we just wouldn't just copy what others have done and have like another Bitcoin ETF. So we always look to try and do something different.
No, that's definitely understandable because even those companies are exploding as well. So the better Bitcoin does, those companies are doing well. And the perfect thing
Yeah,
is too, those companies are taxed, you can tax shelter it because, you put it in your registered accounts and so on, especially companies like MicroStrategy, I believe with Michael Saylor, correct?
that's right. Yeah.
Yeah, I actually saw one of his interviews the other day with Patrick Bet-David, PBD, from Valuetainment, and I believe he's raising another 9 billion. He said something of that nature. So I think he's all in, and I believe he's been all in, which is a good sign. On the next section, do you think leverage ETFs actually hedge inflation, especially with things that are expensive going on? What are your thoughts on inflation and leverage and short ETFs?
So look, leveraged ETFs, whether they're leveraged single stocks or whether leveraged indices, just provide leverage to a given stock or an index. So in the same way that stocks can hedge inflation, or the same way that markets more broadly can hedge inflation, then leveraged ETFs can do the same thing. I think the question is always in my mind, what is inflation and how much inflation before it causes a problem? And so to me, stocks have always been a good hedge against inflation, but sort of relatively benign inflation. So as we saw clearly at the end of 2021, and then coming into 2022, when we suddenly realized that inflation was actually a problem, stock prices tanked because the Fed had to raise interest rates to try and cool inflation down. But as soon as the market sort of decided that we'd reached the peak in terms of interest rates and the trajectory for interest rates was going to be lower, then stocks started to rally again and obviously reach new highs. So to me, all leverage is doing is just amplifying the exposure to an existing stock or existing index. And I think the stocks do make a good hedge against inflation over the long run. But clearly, you just got to be careful about these periods like we saw in 2022, where we had breakout inflation that was too high, too quick.
Exactly. And I mean, I'm sure we all know about the stock cycle. There are going to be lows. And if you leverage, you just have to be a little bit more careful because, a 1% drop is not really one, it's a 2% drop. Or even a 1% increase is going to be a
Yeah.
2% increase. So on the topic of not only inflation, but with these market swings, with everything going up just because of the election, even though the whole world is kind of in turmoil, I would say. What are your perspectives on this new economy, this new form of investing that's coming up?
Yeah, I mean, look, I'm hugely positive about it. This year felt like the economy was still in good shape, at least from a financial market perspective, from stock market perspective, and that the market would make new highs this year, which it's obviously continued to do. And as you've seen with the election result we just briefly mentioned, that's been received very positively by markets. And so markets again have gone to new all-time highs. Crypto's gone to new all-time highs. Tech stocks, the market more broadly. So I think people are feeling really good about where we are right now. Interest rates, as we know, this month the Fed cut interest rates again. So we're down now 75 basis points, or 0.75% from where we were a couple of months ago. And we expect that we'll see another interest rate cut next month in December before we end the year here. So that's 1 percentage point lower than the high. And so I think interest rates continue to come down. I think inflation moderates. And, we're in an environment where if the incoming Trump administration can do some of the deregulation, some of the pro-business sort of policies that they're putting forward, I think most analysts now on the street talking about, again, markets, S&P 500 again, of, significantly higher numbers next year.
I totally agree because here in Canada, interest rates have been being cut a few times as well this year. I believe we're sitting at about 2.5% inflation. However, our interest rate still high, but still getting cut. So now looking at the other side of, I guess, investing, let's look at commodities. I know a lot of people don't really talk about commodities, but what with this new Republican leader, I know commodities is one of his favorite things that he likes. What do you think about the commodity sector? I know you guys do have investments in commodities. Not only can you name a few, but can you also tell us what the commodity investment future looks like?
Look, I think that it might be one area that's challenged, at least in the short term, because if the last presidency was anything to go by, what increased production does in the commodity side, so encouraging oil producers, for example, to produce more oil, is you're increasing the supply. And all things being equal, when you increase the supply of anything, typically that means lower prices. And clearly that was the objective as far as the president was concerned, to make sure that gas prices were cheap, energy prices were cheap. The US became a net exporter of energy. So I think that will be a playbook that will continue this time around, which is not bullish necessarily for commodity prices, at least for energy prices. I think where you see some lift in the commodity sector is on the precious metals side. We've seen gold, being, very robust here, even with, yields backing up a little bit and the dollar, strengthening. And I think that's because, irrespective of really what happens, one thing we knew coming into this in terms of the presidential election, whether it was Trump or whether it was Kamala Harris, is that both were talking about expanding the level of government debt. So assuming that yields stabilize here, sometime in the next few months, assuming that the dollar stabilizes, and all things being equal, we're looking at a US government that continues to grow its debt. I think that means you'll see higher gold prices. And when you look at global liquidity against the gold price, the correlation is quite good in terms of the more that now countries around the world are starting to ease, meaning that financial conditions are loosening, not tightening, that's typically positive for the gold price. And I think that's why you're seeing gold prices moving up.
I think you hit it right on the head because precious metals is something that I've been looking into. A lot of people have been looking into. Also, it's something that now people are talking about, unless it's only gold. But if you look at the other commodity, precious metals that are used for electric components or devices, especially palladium, uranium and things like that. Just amazing sector. So now let's go back to Granite Shares a little bit. So Granite
Yeah.
Shares has made some amazing strides in their unique ETFs, original ETFs, and not following the bandwagon. But what does set you apart from other investment companies or investment firms?
I think what you just said, I mean, is being a pioneer, it's really pioneering new asset classes, new categories of ETFs. So not just leveraged single stocks, where we are the global market leader and we have the largest product suite by number of products and the largest leveraged single stock ETF in the world, which is NVDL, but by launching unique investment strategies. So whether it's income, which is our HIPS ETF, where we have it's not a leveraged ETF, it's a income ETF that produces over 10% per annum in terms of income, or our disruptive technology ETF DRUP or DRUP is a ticker that has a unique index from NASDAQ, or whether it's the precious metals or commodities. We always try and differentiate ourselves by offering unique strategies, or strategies that, if they're not unique per se, they're differentiated from what you can buy elsewhere in the market. So that's what a company like us has to do to set ourselves apart from some of the big names, the big branded asset management corporations out there that offer typically a lot of generic products. We have to do things differently. We have to be innovative. We have to be unique. And that's what you'll find from a company like us.
And that is something why I actually like Granite Shares, because I have dibbled and dabbled in other mini investment firms, and a lot of them are pretty much the same. They have very similar ETFs. The only difference is maybe the management fee. But with Granite Shares, when looking at even just the Nvidia long or even the Apple long, not even the leverage, just looking at regular stocks as well, I think it definitely sets you apart because people have more options. People can do more things with your company. So in this environment, the turmoil, volatility, what kind of advice would you give to a new investor that wants to get into leverage or shorts, or even just any of your other products? What type of advice would you give them?
I think the advice would be the same, really, in terms of any type of investor looking to get into any product, regardless of whether it's a leveraged or a short product, which is just really understand, what the product is and how the product works before, trying to invest. And the first thing, like I think any product, regardless whether it's a financial product, is like, understand what it is and how it works and decide whether that's the right fit for you. Because leverage products are not for everybody. These are for people that are comfortable with risks, that want to take risks. They want to, have the potential to magnify, gains in their portfolio. But if it goes the wrong way, you magnify losses. That's the quid pro quo with leverage products. So these are not for everybody. And for anybody looking at these products for the first time, what I would suggest is, just like any product, like really understand what it is, make sure you're comfortable with it, and make sure that you've made that decision that it's the right fit for you.
I agree. I definitely agree, because it is all about risk management. And it's just even with regular stocks. I always tell my viewers, always do your due diligence.
Exactly.
Always invest in money that you have no problem losing. Like, don't use your rent money or, your car payment money. But no, that is very good advice. And I hope that my viewers, not only, even though they may not want to listen to me, at least they can listen to a true and tried CEO of a major billion-dollar in this company. So Will, since the last time you were on this channel, we added a little segment where we asked just out of the box questions to the people that we interview, just for the fun of it. Are you up for it?
Sure, let's do it.
All right. So, if Granite Shares was a person, what kind of personality would it have?
Ooh, well, I think if it was a person, then I have to say it's entrepreneurial, innovative, and willing to take risks. So that's really the essence of the company. And I think whether you're a person or not, that's the kind of attributes that we would have.
I like that. Ambitious, go-getter, that type of mentality. All right, second question. What is the most random app that you have on your devices right now, or any of your device?
Random app. Um,
Something that you might just have downloaded. You're like, okay, I'll just keep it on the phone or on the tablet.
I probably have loads of random apps, to be honest with you, but I guess it depends on what your definition of random is. But certainly, you get an app for everything. So I have random apps for parking, for
Okay, like a
stuff
parking
that
app.
might.
That's pretty cool. What's the parking app that you have? Is it like the local
Um,
parking? I
yeah,
guess that's
exactly.
okay. That's actually
Yeah.
really cool because out here in because I'm in Canada, so we just started rolling that app out. So it's actually cool to see that you guys are fully into it. And the last question, if you were not in finance or stocks, what totally unrelated career would you be in?
Oh, come on. Is this a real answer or is this a
If maybe growing up as a kid, you had dreams and goals of being, even Superman.
Yeah, I think like a lot of kids, I mean, for me, it would have to be, a professional football, I mean, I should say soccer player. Um,
Nice.
and so, that would have been a dream, but that's not a realistic thing. I think if you're asking me like something that was realistic, if I wasn't doing finance, I'd say probably something in the technology sector.
Okay.
Um, I think would be like my realistic answer for you.
Like AI, something in that world.
Yeah, yeah. I think it's like if I quit what I was doing today and wanted to do something and it had to be a different, industry, a different field than finance, I think technology would definitely be it. And yeah, I mean, clearly AI is really where all the action is right now, other than crypto. But I would probably do something with AI.
And you know what? That's perfect as well because I think maybe 30, 40, 50 years ago, finance and computers or finance and technology were kind of so separated, right? Now you can invest thousands, hundreds of thousands just from your phone, which is, 50 years ago or 30 years ago was unspeakable. But no, thank you for that. It's just a fun little
Yeah.
thing towards the end of an interview. So now before we conclude, Will, is there any last minute mentions, significant events coming up with yourself or Granite Shares that you would love to tell my viewers?
We just launched three new ETFs. So ETFs, there's two times leveraged ETFs on CrowdStrike, on Taiwan Semiconductor, and Micron. So check those out if you're
Okay, so you know
into.
what? Before we end, do you want to
Yeah,
elaborate on those three ETFs? Because I love, the semiconductor sector. I love CrowdStrike. I know they're doing big things now, coming with a whole, new system that they've been speaking about. Would you like to take a minute and speak about those ETFs?
sure. So this is just really just an extension of our, levered single stock platform. So we're always trying to provide, exposure to ETFs that people ultimately want to get exposure to themselves. And so with both Micron, Taiwan Semiconductor, and with CrowdStrike, those are three companies that we've had quite a lot of demand from investors for. And I guess in some respects you could say that they're somewhat related, but Taiwan Semiconductor, we get a lot of interest from our clients in Asia, for example, where that's a huge name, clearly a big supplier in terms of manufacturer for companies like Nvidia. And I think in terms of Micron and CrowdStrike clearly went through their big issue, the big outage a few months ago that everybody's well aware about. So CrowdStrike is probably more of a recovery story right now, but it's a stock that's very heavily traded,
Okay.
and people typically have very strong views on the cybersecurity space. And I think that again with the growth of the internet, these kind of companies will just be more kind of significant, more important going forward.
Perfect. Thank you for that. And my viewers, please check out those three new ETFs. I have not checked them out yet, so I'm definitely going to check them out after the interview. So Will, thank you for the amazing wisdom, knowledge, not only about finance, global finance, but even diving deeper into Granite Shares and their new ETFs. I know this is not going to be the only time or second time that you're going to be on this channel. I'm sure there's going to be many, many more giving us updates on Granite Shares and giving us, insider views on what's happening in the world of finance. So Will, thank you so much for being here. We will definitely stay in touch. And my viewers, I will have all of Will's and Granite Shares information down in the description box below. So make sure you like and subscribe if you like what you saw or got some knowledge from it, which I know you did. So everybody, enjoy your time and stay ranting.